I'm Osborne Foreman, and this week I'm going to show you the UK stocks I bought, the top riser and faller in the portfolio, as well as the share tip of the week, which is listed in the FTSE 100. And if you find this video useful or vaguely entertaining, please drop one of these to support the channel. I'm going to try that one again. One of these to support the channel. Thank you. According to Google Finance, the FTSE 100 is up 1.38%. The FTSE 250 is up 4.22%. And the S&P 500 is up 4.17%. My portfolio has actually underperformed both the FTSE 250 and S&P 500, only generating a return of 3.26% this week. But it does mean that I have outperformed the large cap, well-diversified, mature businesses in the FTSE 100, which I guess really isn't that much of a milestone. Regardless, I hadn't underperformed the FTSE 250 or the S&P 500 by that significant of a margin, and I'm satisfied with my performance this week, considering one of my biggest positions had actually fallen the most. The top topics of the week start with British Gas, or the parent company Centrica. The boss of the firm had announced that due to a pay rail, the family was posted excrement to their house. Yes, I know. This is ridiculous, but this is the top news I can find this week. Supposedly, Centrica's core strategy to reduce the losses made in 2019 and 20 was to reduce their number of employees, or to get their existing employees to sign new contracts with new terms and conditions. But this, combined with the threat of potentially being laid off, had really amounted to the level of stress in the employees. The CEO blames it on the market environment, suggesting that price caps on the energy for customers had really limited their growth, combined with falling gas prices, and that this was causing their key losses. Naturally, the employees of this company were very supportive, and that's why I think it's very considerate that they decided to give the gift to their CEO in such a time of economic struggling, when his salaries increased by around 4 times, but some employees are being laid off, so it's very considerate that they had sent some manure that could possibly be used for fires or growing their own fruit and vegetable in the garden. I apologise if this offends anyone. I don't know the internal complications of this business, but I wanted to add a little bit more entertainment this week. The next topic is a personal change I'm going to be making with the channel. In the past, I've made community posts. That might be via the announcement of new subscriber milestones or changes to the channel. Well, this week is kind of a mixture of 2 factors. That is, I like to include more polls on the channel. I think this could be quite a cool way of seeing how the community thinks of specific stocks, perhaps cryptocurrencies, or just investment and finance strategies. So I'm going to be asking out a few polls a week, asking these questions. I think this can be quite useful for those that would also like to find out these results. This is because I would hope that it gives a different perspective than the typical news articles or finance bloggers, and because my user base is primarily focused on UK stocks, I hope it offers more of an alternative perspective on our markets, and therefore could be quite useful as just a simple research tool. And that's why on Saturday I had posted a poll asking about Bitcoin, buy or sell. And from what it seems like, the audience or the community of this channel in a slight majority would rather buy Bitcoin than sell it. I hope to be reflecting perhaps more UK stocks, different investment strategies in the future, and I hope it can be used as useful, but by all means, I'm open to suggestions, and if you don't like this idea, I will keep that in mind. This week, the biggest announcement made was for Games Workshop, and I believe this would have went under the radar for a majority of people. That's because the newest Total War Warhammer game has been announced, the final of the trilogy Total War Warhammer 3. And you may ask, what is so special about a video game, especially the third one in a series? The key point here is brand awareness. Whilst Games Workshop may gain a slight bit more in royalty income, it's really truly about that brand awareness, as it can convert more players into the lore and the fan base, and therefore they might be paying more or buying their first tabletop products from Games Workshop. And that's why I think that transition of customers here would be good. It's also going to be building already upon the expansive lore, and whilst I don't know the exact name, one of the new settlements or provinces revealed in this game has barely been covered at all in written documents. So there's certainly some potential for the lore to be expanding, and all I suggest is that I will leave this in the description down below, is you watch the trailer for this. I would love to put it on the video, but I believe I'll get copyright claimed and I don't want to lose that. However, it's a 3-minute long trailer and the animation is absolutely fantastic. What this animation shows is that there's a lot of potential for this business to go into TV series, which I've mentioned a lot in the past. But honestly, I feel so hyped up for it, and that may be because I am a Total War fan, and so this game is right up my street, but also it just looks so incredible. And it's important to also realise that Total War Warhammer 2 was actually what had made me more aware of Games Workshop and look at them as an investment standpoint when I had first bought the game when it came out in 2017. Furthermore, this will be the last game in the Warhammer series, and many of the customers are therefore speculating what will be the next game. Total War has normally been historical games, however people are dying or urging for more fantasy games, and therefore a possible suggestion is the idea of Total War 40k or Warhammer 40k, which could therefore mean more brand awareness, more royalty income, and therefore more potential sales of their tabletop games. And as I said, this means with that trailer as well, there is a lot of potential for a TV series, and these games are only going to keep building up the potential. And I say this because whilst, yeah, you could have perhaps Lord of the Rings Total War game, or others, their licensing is already taken. Games Workshop seems like the natural business to work with for their next fantasy game, and there's already a lot of lore on it. That means I've bought an additional 8 shares of Games Workshop this week, bringing my total holding to 61 shares, or 32.2% of the total portfolio. Shares have been weakening, and in my opinion, this is a prime opportunity to buy. With the future looking very bright for the company, we could see a potential acquisition because of the amount of IP or licensable IP they have, but also the core growth of their products is quite strong. Although you may have noticed that this is quite a large buy for me to make on a weekly basis, and you would be right. And that's because I had to actually sell another investment to fund this acquisition, which smoothly brings me on to the top riser in the portfolio, which had risen by 8.8%. It is the London Stock Exchange Group. And you may think, why not let your winners ride? Well, in the short to medium term, I can't really see London Stock Exchange really increasing that much more. The Refinitiv acquisition was complete. That had happened last week, although on the Freetrade app, which is the broker I use, what I had noticed is it hadn't updated. So whilst I said it had been pretty disappointed, I didn't realise it had actually gone up to a new all-time high of around £94. With the Freetrade app, it can be unreliable at times. If you're interested in it, I do use Freetrade Plus, and that's how I used stop losses to sell a majority of my investment. If you're interested in signing up to Freetrade, I'm going to leave a link in the description down below. I use stop losses with London Stock Exchange because I no longer wanted to hold this business. They're now valued at something like £46 billion, and that's definitely too high of a company for my opinion, and it's very unlikely they're suddenly going to increase to a £500 billion company in the next 20 or 30 years. Therefore, a stop loss on the investment means I've reduced my downside risk, whilst also having potential that if it hadn't have triggered, that in the future I could have got a little bit more returns. However, a 10% return on an investment that hadn't really done that well over the last 6 months is a win in my opinion. You will have noticed that my stop loss triggered at £93 per share, and it's closed at well above £94. But honestly, I'm not bothered about a 1 to 2% move, and I'm happy that I've invested it into Games Workshop because this is the opportunity cost that I think Games Workshop on this temporary weakness could be a huge move in the future of the portfolio, especially because Games Workshop valued at around £3.2 billion. I could certainly see this company being 10 times the size in 15 years' time. I also bought an additional share of Halma, in which I'm slowly and steadily building up the size of the investment. I now hold 54 shares. I see this as my most defensive stock, and before you say, hang on, Halma is not a defensive stock in any means, that's because it's my most predictable and consistent performer in the portfolio. And it's not that they lack growth potential per se, but they certainly would be the lowest growth potential of most of my investments in the portfolio, seeing as I now hold Boohoo, Games Workshop, and Team 17, for example. They also have a lower volatility, which could be used to my advantage, much like what I did with London Stock Exchange, but this is a stock that I will review in 9 to 12 months' time alongside Ashtead Group. and I will continue holding until then because I believe they certainly have a lot more upside potential, but I want to know how long I can really last with this as they are on the higher side of the spectrum. At the moment, I'm happy to continue holding. Sure, Halma has been one of my weakest performers, but that's of no concern to me. I'm happy to build this position up. And also this week, I'd received £3.36 in dividend income, which is slowly boosting my overall passive income, and it could have covered my sim-only contract for the month if I wanted it to. Furthermore, Ashton Group also paid a dividend of £3.21, but both of these stocks are becoming smaller fish in the portfolio and therefore aren't going to provide as much passive income as Games Workshop, for example. The other stock I had bought more shares of this week was Team 17, and I had bought 24 more shares, adding it to my position, creating a holding of 73 shares. In the last 2 weeks, shares have been weakening. That was over their great results, but lower expectations in the future. There are also another acquisition of Golf With Your Friends, which I'm very bullish on. So that's why I've been buying more. I think this was a good time to open a position with the company despite their significant run up in the last year. I'm going to continue averaging into this investment, build the equity up, and as I've said before, I want it to be probably my third largest position in the portfolio and have it as a serious core weighting as I'm bullish on their long-term return. But it is worth noting that if Games Workshop continues to drop, then I'm likely going to be buying more Games Workshop than Team 17 because I think there's more value in Games Workshop at the moment. You can also see my trading 212 pie, which reflects my ideal allocations for each stock in the portfolio, and I'll leave the link in the description down below, but be aware I'm still suspended by trading 212. They're not accepting new users, so if it says you can get a free share, I don't think that works. And I've had absolutely no update yet on the whole situation, so if you use anyone's referral link on Trading 212 when there are new users available, I highly suggest that you either ask a friend that has the app or look for other creators in the finance or investing industry. The share tip of the week is a lower risk, large cap dividend stock in the FTSE 100. They are a well-known brand and well diversified, and it's very likely you have some of their products in your cupboards at home. Recently, however, analysts have said that their 2020 results are going to hit their profit margins a lot more than expectations, and this has led to a severe pullback in the shares of this stock. And that has actually put them into a 9-month low. And if you go back 9 months, that's only towards May and very near to the pandemic crash. So this could be a good valuation to buy into. Furthermore, the company is trying to transition. They're looking for more growth opportunities in the future. They're doing this by exposing themselves further into plant-based foods. There's been a lot on this recently and they are very confident on the outlook for it. So they're going to put more investments into that. And they also have a really high exposure to the emerging markets, which haven't really performed so well so far in the last year. They have 2/3 of their overall proportion of the company or exposure of revenue streams into the emerging markets, and they believe they will be some of the strongest markets for returns in the future, and therefore they're well primed for a good return. But they're also looking for more mergers and acquisitions. They'd like to develop their brands, probably likely dispose of brands that aren't working too well for them, and hopefully build up to be a much more well-known brand in the future. This stock is called Unilever, and I would consider this to be a more defensive stock opportunity, as they are valued at well over £100 billion. And I think this could be a good opportunity to buy for a strong dividend income hold in an income portfolio. I'd be willing to cover this stock in the next stock analysis, and if you'd like that, please leave a comment down below. However, if you're interested in why I got suspended by Trading 212, then feel free to click the card at the top right of the video. Thank you for watching, have a great afternoon,